Hey, it's Jason Rogers here. And in this quick video, I want to talk to you about what the ideal purchase price range is going to be to buy your first business using SBA finance, which is really government-backed financing. It allows you to secure up to a $5 million loan to buy a business or to buy businesses, plural. And I want to really break down the right range, your sweet spot, where you're going to be able to get the most bang for your buck as far as price to value is concerned, right? So let's do a screen share. Let's dive right in. I'm going to show you a few things here. Okay, so first, allow me to draw out this graph. And first on this axis here, this is your earnings multiple. 1, 2, 3, 4, and I'll go up to 5 times earnings. All right. Earnings stands for profit. How many times yearly profit are you paying for the business? All right. And then on this side, we're talking about the actual earnings themselves. And I'll label these here. This is, 250 a year. This is 500 a year, 500,000. This is 750. This is 1 mil. And then this will be 1.25 mil in annualized profit. Okay. And really, this is what the graph looks like if you're trying to buy a business. You hear kind of 2 to 3 times earnings at the really small range. If they're under, 250,000 a year, you're at kind of 2 to 3 times earnings. Once you get to maybe 250,000 in earnings, you start getting up to 3 times earnings. And, once you get to about, 500,000, you're still kind of at that 3 or maybe just a little above 3 times earnings. It still stays, and let me clear this up. I was just here to show you the kind of general place where we're at. And then as you get, to about 750,000, now you're at this about 3.5 times range, which is still doable. But what happens from about 750 onward is this line starts getting pretty steep. And it kind of goes like this, right? So up until this point, if you notice, this line is generally pretty close to flat. But once it gets here, it gets really steep. That was kind of an ugly draw there, but you get the point. It gets way steeper here. This inflection point around 750,000 in earnings is really when the earnings multiple gets a lot higher, such that when you're talking about $1 million business, it's very common for this to be at the better part of 4.5 to even 5 times earnings right around this $1 million point. And then if you have earnings above $1 million, you're above the 5 times earnings point, and your pricing just starts getting really competitive. And this gets into private equity land. Private equity, these are big players that are coming in and buying these bigger businesses doing 7 figures or 8 figures plus a year in earnings. So what's your sweet spot for you as the first-time business buyer? It's really this area here between about $500,000 a year to 750,000 a year. Or if you're looking for a smaller business and maybe you're slightly less ambitious, this is a great area in this 250,000 to 500,000 range. And here is great as well. You're getting a 2 to 3 times earnings business. You're in this sweet spot between kind of 2 to 3 times earnings. You're getting between $250,000 to $500,000 in profit. This is before your debt service, before the SBA loan. And then if you're a little bit more ambitious, you play in this range between about the 500 to 750. You're still going to be able to get a business kind of in that 3 to 3.5, maybe 3.75 times earnings range, but you can keep it south of 4 times earnings. This is really the key. You want to stay south of 4 times earnings, and that's going to really help you out. Now, let me go to a different screen share here. 1 second. Shameless plug for my website. If you go to my website and you go to the extra resources, there's a couple of really nice tools here, these different financial calculators. And one of the things you're going to be judged on when you buy a business is DSCR, the debt service coverage ratio, right? And so your free cash flow or your net operating income, this is the profit, and if you have a business that's doing 500,000 in profit, you'd like that debt service to be maybe 300,000. Whoops, that's wrong. This is a DSCR you can get financed, 167%. What is DSCR? It stands for debt service coverage ratio, and it's how much free cash flow is left over after you pay your SBA loan. After you pay your SBA loan. So this is saying for every dollar I pay towards debt, I have 67 cents left over I can slide in my back pocket. In this example, you're paying $300,000 in debt service and you're able to pocket $200,000 per year. Now, what is an SBA loan going for right now? Let's pump it in here. For a business acquisition, let's say you're buying a $2 million business, it's going to be a 10-year fully amortizing loan. And right now it's going to be at about 10 to 11%. So we'll just use 10 years, 10%. And this calculator is great because it gives you your monthly debt cost and it gives you your yearly debt cost. And so then what you can do is you take these numbers and let's say I'll go to like a biz buy sell. 1 second. We'll just find a business real quick just to give you a little bit of a better example of what's going on here. Let's see. I'll take this, a pool supply franchise. I'm not a huge fan of franchises, but to each his own. Okay, so the cash flow here is $206,000, and you can't quite finance 100% of the acquisition unless if you already are in the pool franchise business. That's a technical point, but let's just say we were going to finance all of it. This gives you a rough estimation, right? So let's take the asking price. Let's put that here. Okay, our loan costs per year is basically 100 grand, 99 to be specific. Now let's go to the extra resources and go to the DSCR calculator. We put our debt cost of, we put our debt cost of $99,000. That's what we calculated on the last page. And then we're going to put our cash flow of $206,000 here. And this is good. This is a DSCR of 208%. That deal would get done. That's assuming that cash flow is true, right? And this is where we need to do diligence to see. But if we go back now to the whiteboard, if you remember, we talked about when the earnings is south of 250,000, right? This pool deal was 206,000. When it's, when it's in that sub 250,000 range, here we go. Like this was, we talked about the earnings being at that 2 to 3 times earnings multiple range. And that's exactly what this is. It's kind of playing in this spot right here, between 2 to 3 times earnings. I know this is getting a little messy here, but hopefully you're getting the point. And the punchline is understanding how to run the calculus on these different deals to understand DSCR. This is the metric that a lender, SBA lender, is looking at more than anything else. Understanding how to take the listings you get on a biz buy sell, for example, to work them into the calculator is going to be really valuable. But also just understanding what's market is really important. And in this case, the punchline is this is really what you can expect. I'm going to clean up this so you can just get a little bit of a better view before I started bastardizing everything. All right. The punchline really is I undo all of this and we take it back to the bare minimum is just what this shows right here. Okay. Your valuation kind of looks like this, your expectation evaluation. When you're under, get out of here, buddy. When you're at that 500,000 in yearly profit or less, it's doable to find a deal in this range, under 4 times earnings. Same thing if you stay under 750, you can still get a deal. It's in this range here between 3.5 to maybe 3.75 times earnings. Once you start getting profit, this stands for profit down here, right? Once that profit, not a very good profit, but hopefully you can tell. Once that profit, that yearly profit gets north of 750 and we go in this direction, our valuation normally goes way up. So if you find a deal where the profit is $1 million and they're only asking 3 million for the deal, that's 3 times earnings. That's a sweetheart of a deal. If you find a deal that's 3 times earnings doing 7 figures in profit, either it's too good to be true or it's an opportunity you got to jump on. And this is where you have to investigate the motivation of the seller and these other factors. All right. So I'll make more videos going into greater detail about some of these aspects, but I wanted to get into this one to help you with those important details about buying businesses. For more information, go to jasonpaulrogers.com. You can follow me on my different social media platforms at Jason Paul Rogers. I recently got on X, formerly known as Twitter. I'm at JPRBiz if you want to find me there. I'm posting more actively there. And otherwise, I'll talk to you in the next video. Thanks for watching. Bye-bye.